Let's talk about what happened today. The Bank of Canada said it'd be hiking its trend-setting interest rate as the resilient economy hums along and a big source of trade uncertainty is finally out of the way. So it's up to 1.75%. What does that mean? Should I be concerned? Am I going to have to pay more for a mortgage? Is it going to cost me more at the bank? What do I need to know? Well, he is a mortgage specialist with Centum Home Lenders, I hope, because that's what I have written down on the page. Clinton Wilkins is on the phone line with us. Clinton, how are you, sir?
I'm doing just great. Thanks for having me.
We were expecting the economy to be doing well and the government to say we want to keep inflation in check. This wasn't unexpected, this Bank of Canada interest rate hike. I'm seeing now some of the banks are already hiking up their prime today. So what are we likely to look at for increases? What do you suspect will happen in the next 2 to 3 months? Do you think this is the start of a general rate hike overall?
I think historically, rates are still very, very low in Canada. And I think it's going to have very little impact on the people here in Halifax and in Atlantic Canada. But they are going to see increases in their mortgage payments. Some is effective immediately. And others will see an increase in their amortization. So it's going to take a longer time for them to pay off their debts, like their mortgages or lines of credit. And, historically, we've been in a very, very low rate environment. And I think that we've become, accustomed to the low rates. And, they still are really low. So with the increase today, prime has been increased by 0.25. So the prime rate today for many lenders is 3.95.
3.95. So normally, under 4%, that's still a pretty good rate, isn't it?
I think it's still a great rate. And I think, consumers today need to have a look in the mirror and have a look at their household finances. There's a lot of borrowers that have a variable rate mortgage. About 40% of consumers have a variable rate mortgage. And we've been in a situation where many mortgages are below prime. So they've had rates at prime minus 10, 20, 30, 40. And now they're definitely going to see an increase in their rate today because it's going up 0.25. But I think it's a good time. And we're kind of at a crossroads where, the last year and a half, we've been telling all our consumers to, stay the course, don't make a change. Historically, people do better on a variable rate. And I think today you need to take a look in the mirror to say, am I losing sleep over these rates? Yeah, great. Or am I not losing sleep? And I think that, there's definitely some solutions for consumers. I think consumers need to look at either staying the course that they're on now. Alternatively, they're able to lock in with their existing lender, and most lenders will allow consumers to lock in that variable rate into a fixed rate with no penalty. Thirdly, potentially switching to a different lender at a lower variable rate, because a good variable rate today is much lower than it was a year ago or 2 years ago. There's many lenders that are offering a rate at prime minus 100 even now. And I guess fourthly, transferring the existing mortgage or existing debt into a fixed rate with a different lender. And these lenders are a lot like the cell phone companies. They're offering better rates to new customers than they are to their existing customers.
Right. Clinton Wilkins is here with us, and we renewed a few years ago and decided, variable wasn't the way to go. But as you pointed out, we probably bailed before they started offering a lower rate than prime. But that let's keep in mind that the rate is at historic lows. But this is the fifth time since summer 2017 that the central bank has upped the rate. So do you think that there's a ceiling here?
I think the median mark likely is around 5%. And that's what the economists are saying. So right now, we still may see some increases over time. And I think with a variable rate, it's a little bit safer than it is with a fixed. It may move up incrementally over the next periods of a few years. The bigger concern, I think, for me, is those consumers who took a very, very low fixed rate. I remember days when 5-year fixed rates were at 3.29, 3.9, 4.9, 5.9, and below 3%. And those consumers are starting to come up for renewal, and they're renewing into much higher fixed rates. And there's more payment shock for those consumers that are going from a rate at 2.5% to 4% than it is for those consumers that are on that variable rate path, because they're getting prepared for the rate increases over time. The average fixed rate in Canada is 5 years. And, there's a lot of swing that can happen in that pendulum over that period of time.
Clinton Wilkins is here, a mortgage specialist with Centum Home Lenders, on the line this afternoon. We're talking about the raise in interest rates today. The banks are following suit. And we have heard anecdotally and through some of the statistics that some first-time home buyers are finding it's tougher to make those payments. And there was a change to the means by which incomes were tested, and that happened more than a year ago. Do you think that was the right move?
I think that it's the government's trying to protect consumers, at the end of the day. Mm-hmm. I think the stress test is in place to make it more challenging for home buyers to be qualified. We don't want a situation in Canada that's happened in the U.S. Historically in Atlantic Canada, we're quite conservative already. Mm-hmm. And we have pretty good incomes in Atlantic Canada compared to the rest of the country based on our cost of real estate. The cost of real estate here is much, much lower. In Halifax, the average home price is about $3.25. Mm-hmm. And people that are buying those houses today with a 10% down payment are seeing about a $40 increase in their mortgage payment today based on the increase from the Bank of Canada.
Right. Well, Clinton, we do appreciate your knowledge, your expertise, your availability. Thanks for coming on the show to talk a little bit today about interest rates.
Anytime. And if anybody has any questions, certainly they can reach out to you and feel free to pass it along. We'll try to get back to them.
Perfect. We'll do. All the best. Clinton Wilkins, mortgage specialist with Centum Home Lenders.